Hey traders, welcome back to Your Nifty Guy. I hope all of you are doing well, unlike today's market. So, if you've ever wondered what a clean textbook bearish day looks like, today was exactly that. From the opening bell itself, bears were in total control and the market respected structure beautifully. This is why planning matters more than predicting. In today's video, I'll break down how our levels worked, how the trend unfolded, and most importantly, what this strength on the downside means for tomorrow's Nifty trade. You'll get clear levels, structure-based bias, and high probability zones to focus on. Before we dive in, make sure you hit the like button, subscribe to the channel, as well as put down anything that you might have to say in the comments box. How did the expiry go for you? Any questions that you might have, I'll try to answer them to the best of my capabilities. Also, the link to the Telegram channel, which I have recently started, is in the pinned comments of the video. Make sure to go and subscribe to that as well. This is where I will be posting in my news and views of the Indian stock market in general. There will never be anything sold to you via that particular channel. No tips, no courses, nothing ever. It's just one more medium for me to connect with you guys. So make sure you are subscribed there as well. Uh, yeah, so now let's dive into today's price action. And markets opened flat today and opened inside the no trading zone that we had discussed yesterday. Immediately went into a selling spree, gave us a closing below previous day's low. But then the pullback was not significant enough, right? What do I mean by not significant enough is this candle, although green in color, I will still consider this as a bearish candle wherein prices did go up, high up, but then close near the lows of the candle, right? So that shows lack of strength from the buyer side. Had this candle been a little more deeper or maybe followed up by one more green candle and then this low would have broken, I would have entered into shorts right around here. But then that was not the case. And then post which Nifty went into a sideways zone. And this is where the most important trade of the day comes in. Now focus and listen very, very carefully because I am going to explain a few concepts about breakout trading, right? So when you are an option buyer, so breakouts and breakdowns are very essential for you to take momentum-based trades, right? Today, I'll first explain the trade that I took. I entered into shorts at this particular break of low at the 12:05 candle. Now, the reason for me to enter into shorts out here, now some of you who would have been watching my old videos, so the market had already moved a lot right before it breakdown of this video from the day's high 150 plus points. The move had already come in into the Indian markets, and I always say that whenever there is a big move, or we also always need to see where the market is coming from before entering into further short. So if the markets have already moved in 150 points and after a pullback, it is very difficult for the markets to go in, or very not difficult but then very low probabilistic of the markets to actually move or give us another 150 points. Now, of course, that can always be there, but then the reason why I entered into this particular trade is because of this sideways consolidation, which is also known as a VCP or a volatility contraction phase, period, whatever you want to call it. All I want is the range in which the prices are moving to reduce over time. This is exactly what happened yesterday out here as well, wherein volatility contracted, and you can see once the move broke out of this particular sideways contraction range, you got a good trade on the upside. Similarly, out here, there were two scenarios which was happening, or particularly what was going on in my mind. Number one, markets came down, started forming a base just like yesterday, and after a period of sideways consolidation or volatility contraction, if we would have broken out above this zone, we could have entered into a long trade. And if we are breaking down below this particular zone, the short trade was active, right? And I would not have entered into the short trade had the price action looked somewhat like this. Instead of going sideways, if the markets would have just given us a good pullback like this, which is a good enough pullback, and then this low would have broken down, I don't think I would have entered, keeping into mind markets have already moved 150 odd points from the high. But just because we got this particular volatility contraction phase, and always remember these volatility contraction phases are very important for you guys to identify because these acts as springs. The more you compress them, the more momentum that you get once the spring gets released. Similar is the case with price action. Once the volatility contraction phase, the market breaks out of it, it gives a good move on the side, whichever side it is breaking out or breaking down on. So This is very, very essential for you to identify. And like you can see out here, this is where I entered into shorts. Of course, the stop loss was right above this particular swing, a bit, tad bit on the higher side, but then again, worth taking the risk, especially keeping in mind that we are trading below yesterday's low. The market has shown a good bearish sentiment, a good sideways consolidation, and then we are breaking down. So this is where I entered into the short trade, and I kept trailing with each swing, and I exited in this particular 2 o'clock uh, candle which formed here. So out here it looks like a doji, but then on the options chart of next week in which I was trading, it formed like a good inverted hammer opposite to my price action. And in this particular trade, I captured only around 26 odd points. Uh, Too less compared to the move that Nifty has given today, but then something which I am content with, something which is in sync with the system that I follow, something which is in sync with the trade plan that I had. And of course, post this exit, of course, if I would have held on to that position, it would have given me multi-fold returns. But then I exited as per my systems and my rules. Now, I did not exit out here as well and 1250 candles. There were two reasons for it. Number one, on the spot price, we cannot see a clear bullish dominance taking over or coming out over here. All we could see was that these are two doji candles, although they did confirm my rules for entering or exiting the trade as per the trailing method that I use. Now, I had placed two conditions for myself. When this particular candle had formed, we were still below this particular swing that we had broken down into. I and yes, the entry was almost at my cost. The position which I held was almost at cost when this candle was out here forming. And I thought maybe if this is a trap on the downside, just a liquidity grab before market moves up, I will exit if market enters back into this particular above this particular swing and gives me a closing, and I'll not wait for it to trigger the complete stop loss, and I'll not take a bigger hit. But then again, that did not happen. Markets did not go and give me a closing above this. And again, you are at cost, right? Try to understand. You trail once you are in profit. So this is not a trailing stop loss because out here you had just entered some time back, and out here you are just at cost. Neither your stop loss nor your take profit is hit. So that is the reason why this around here, although the conditions were fulfilled, this is the logic based on which I held on to the trade. And it was a good thing. Again, I exited out here, and this was the only trade that I took. I had stopped watching the open interest chart today. Today was the expiry, but then I received a message from a couple of followers on the channel. Uh, they captured very good hero zero trades today based on the expiry setup that we have, and I am happy for all of them. Uh, Again, I did not, and I don't trade when I don't have the complete focus, and I was not actively looking at the open interest or the change in open interest right from the start of the day because from the very start of the day, the OI was looking as very bearish. The PCR was around zero point 0.6, and the highest call writing around apart from when the markets was around trading out here was around 25,500, then started moving down to 450, then to 400. So the bears were pushing in their pressure. There was not enough significant put writing as compared to call writing. So although we got a trade on the downside wherein put writers were trapped, I was honestly only looking for a trade on the long side based on the hero zero setup wherein most call writing, maybe once these 450 levels would have been breached and 4 450 500 these levels would have been breached, that is something where we could have got some short covering moves. Now that is what I was looking at, but then again, the market had other plans and I did not participate in this. And I have zero FOMO, absolutely zero FOMO about this. I got a good trade as per my setup. With the quantities that I trade in, I have a decent profit today. So absolutely fine. It is not necessary to capture every single move that the market is throwing at you. But then again, what an expiry it has been. Clear domination by the bears. And uh, like I said, right now, the geopolitical scenario is not at all good. The way gold and silver are surging, right? These precious metals, they are surging. They are signaling towards a impending bad news in the market, right? So there's something which the market knows. As the saying goes, the market discounts everything, and way in which these precious metals are surging and the markets are tanking. Of course, the markets are reacting to one man's whims and fancies, which is Mr. Donald Trump right now. Even the Supreme Court is delaying the verdict on the tariff scenario, which is not giving India any reason to cheer per se. Uh, and of course, the tension or the situation around Greenland is very much uh, must be well aware of. So if you are trading, you must keep a track of these global scenarios and news because out here, of course, one news in the market, live markets, which the market is not prepared for, and you can get a good move. So yes, keep a track of these news and keep your trading on the lighter side because things can get real messy out here. Uh, so I hope the geopolitical scenario is something that you should keep a track of. And yes, this particular again, this was another VCP. So the VCP zone or the contraction zone that I speak of is out here on the hourly time frame also, which we had drawn a good move on the downside, followed by a volatility contraction period. Once we broke down from it, we got a small pullback, and once the low was taken out, look at the madness, right? It is right evident in front of all of you guys. So, yeah, do not miss these volatility contraction periods once as an option buyer. Right now, if we are to plan for tomorrow, today was a good trending day. Tomorrow is a good probability that we might see some sideways price action. We can see a continuous follow through to this price levels as well. The simple reason being US, I believe, was trading in a big negative as of the last time I checked some time back. And based on that, we can have a negative opening, but let's see how the market unfolds. Of course, the sentiment is absolutely bearish as of now. Do we need to extend this? I don't think so. Now, there are key things to look at the markets right now. On the weekly levels as well, we have given a breakdown of a double top pattern, right? So this was the swing, down move, another high. So this 25,700 odd levels, like we had discussed in one of the earlier videos, was a crucial level. And once that broke down, we got a good move on the downside. Now, on the monthly time frame, if we are to use the swings to get a fib level, I'll be using this to the. There are two things that I want you guys to pay close attention. Now, this is a monthly fib level, right? Okay, we'll be deleting these and we don't need them for tomorrow. Okay. Another thing, we are trading almost at the monthly fib levels. Plus, this is the 200-day moving average. So this is a simple moving average SMA. This is the daily charts. This is a 200-day moving average, a long-term trend, which can and should act as a support. And we have reached very near to it. So again, another these 25,000 odd levels can also act as a very good support. So right now, although we are in a bearish territory, we have also broken down below this particular swing. I will advise some caution for trades on the short side. Now, I don't need this moving average. I had simply plotted it for you guys to show you that we are near a daily time frame moving average. So 25,110 odd levels that we saw was the daily time frame moving average, 200-day moving average. For tomorrow, I'll keep the plan of action very simple. We mark today's low based on the opening and where the market is coming from. Below this, we are short. Since today was a very good trade on the short side, a good trending day, and keeping in mind that we are near supports, we can get this particular scalping move on the long side as well, wherein, sorry, the color of this candle needs to be red to signify bearishness. We need a good bearish candle giving us a closing below today's low. And once the high of that candle gets taken out, that's the cue to go long for a scalping trade, right? We are yet in bearish territories. This is a simple trap setup wherein all the people who would have missed out on today's short trade, and if they short the market at the open, showing fresh new short traders who have entered the markets, and the high of that candle gets taken out, that's the cue to go long for a scalping trade, right? This is a scalping trade. Get quick entry, quick exit, and that should be it. And I'll also use the hourly fib to get us a resistance level as well. So the 0.5 to 0.618. This is the 1 hour fib, right? Okay. Now coming back to the 15 minutes time frame, if we observe some negative price action around here, maybe say, sorry, maybe if we open with a gap up, or maybe this trade we exit out here, or else if we see any negative price action around these levels, we can create a short entry as well. Long entries, I will of course, needless to say, on the early time frame, based on early time frame fib levels, I will be planning only and only above this level. So this will be the simple and complete trade plan for tomorrow based on today's strong bearish structure. Remember, when the market shows you clear strength or weakness, the smart move is to align with it, not fight it. Trade the plan, respect your levels, and always manage your risk. If you found this video and helpful, make sure you like the video, subscribe to Your Nifty Guy, and share it with a fellow trader who believes in structured trading over random tips. I'll be back with another clean plan tomorrow. Until then, stay disciplined, stay patient, and as always, let the market come to you, right? So that's it for today, guys. I'll see you guys tomorrow. Till then, trade safe, trade smart. Cheers, and thanks for tuning in.